Hello, economic students. I'm Shweta, and today's topic is Measurement of National Income by Income Method. Look out for my videos on value added and expenditure methods. Subscribe Economics Exclusive, where economics is fun, and allow my notifications to reach you. My previous video on circular flow explains that income method is used to measure national income in this distribution phase, where factor incomes flow from firms to households. So in the income method, all incomes that accrue to factors of production in form of rent, wages, interest, profit are summed up to calculate national income. Let's look at the components of factor incomes a little more formally. The slices of this pizza joined together with COE, compensation of employees, that is the amount paid to the employee by the employer for the productive services rendered. Then there is rent and royalty, which arises from ownership of land and building, as well as granting leasing rights to subsoil assets. We have interest, the amount received for lending funds to a production unit, and of course profit, which is the reward to the entrepreneur for his contribution to the production process. But alongside, we also have a component of mixed income, which is any income where wages, rent, interest, profit cannot be separated from each other, like the income generated by retailers, farmers, doctors, etc. Time to pick up each component for better understanding. Now, COE is all payments and benefits received from the employer. So it would include wages and salaries in cash, in kind, as well as employers' contribution to social security schemes. Let's look at each one by one. Wages and salaries in cash is the simplest of all, but just remember that it would include bonuses, commissions, and any other monetary benefits that the employer gives. Wages and salaries in kind would be the non-monetary benefits, like a rent-free home or a free medical facility. But remember, if the facility provided by the employer is necessary for work and is to be used for work only, like uniforms or vehicles for work use, they would not be COE. They would be intermediate consumption of the firm. This part of COE includes contributions made by employer for the social security of the employees, like a contribution to provident fund, gratuity, or maybe an insurance. Rent would include both types of rental income. Actual rent, which would be rent of let out land or building, as well as imputed rent, that is, rent of self-occupied properties. This would be calculated on the basis of market rental value of the property. And royalty refers to income received for granting leasing rights of subsoil assets, like the mineral deposits and the incomes earned by giving the rights of mining to contractors. Interest income is the income earned for lending funds for productive services only. So interest paid by consumers for consumption purpose loans or interest paid by government on public debt are excluded. Also remember to include the imputed interest on entrepreneurs' own funds, valued at the market rate of interest. Profit, the reward to the entrepreneur, is split into three. Corporate tax, a direct tax paid to the government on the total profit earned. Dividends, or distributed profit, the part of profit paid to shareholders. And retained earnings, also called undistributed profit or savings of private sector, kept as a reserve for business expansion or contingencies. Mixed income. It's the term given to that income which cannot be segregated into different heads of COE, rent, interest, or profit. This problem usually arises in case of self-employed people like doctors or CAs, farmers, and also unincorporated enterprises like shopkeepers. Here it would be useful to introduce another term, the operating surplus. It refers to the sum total of income from property, that is rent, royalty, interest, and income from entrepreneurship, that is profit. Operating surplus arises in both private and government enterprises, but not in general government sector, where rent, interest, profit are considered zero, because the motive is only welfare. Time to aggregate. Domestic income, or NDPFC, of the economy can now be presented as the sum of COE, operating surplus, and mixed income, where operating surplus would be rent royalty plus interest plus profit. To arrive at the figure of NDPFC, we would need to identify and classify all producing enterprises into primary, secondary, and tertiary sectors. Then, factor incomes paid by each sector would be classified into various categories of COE, rent, royalty, interest, profit, and mixed income. When all factor incomes are summed up, we would get domestic income, NDPFC. Finally, add net factor income from abroad to domestic income, and we get national income, NNPFC. As always, we cannot ignore the precautions. Number 1. Transfer incomes like old age pensions, scholarships, donations, gifts are not included in national income because these receipts are not connected with any productive activity. Second on the list is income from sale of second-hand goods. Now, these incomes have already been included when they were originally sold. If they are included again, it would lead to double counting. However, any brokerage or commission which is received by broker or agent for the sale of such goods will be included because it is an income received for rendering productive service in the current year. The third thing to remember is income from sale of shares, bonds, debentures, and any financial assets. Now, these transactions do not contribute to current flow of goods and services. They are mere paper claims, just involve a change of title, so not included. Number 4. If there are any services provided by the owners of production units themselves, like an owner-occupied house or own capital or maybe self-consumption, then the imputed value of these services will be included and added because these are productive activities and they add to the flow of goods and services. Don't we all love windfall profits, unexpected gains from lucky circumstances? However, they are not included because there is no productive activity associated with them. So do not add lottery income, do not add inheritance money. Final thing to remember is all payments made out of wealth or past savings are not included because they do not add to the current flow of goods and services. So death duties, gift tax, interest tax, not included. Just remember, income method is also called the factor payment method or the distributive share method. For explanations on value-added method to calculate national income, go back to my previous video. For expenditure method, look out for my next. Stay connected on the 3-video sequence of the simplest explanations of methods of measuring national income on Economics Exclusive.